The information provided by Trading Forex Price Action to you does not constitute personal financial advice. The information provided is of a general nature only and does not take into account your individual objectives, financial situation, or needs. It should not be used, relied upon, or treated as a substitute for specific professional advice.
Weekly Forecast.
Hey guys, this is a weekly forecast for October 4th through the 8th of 2021. Alright, we'll start off with the pound dollar. This is a monthly chart. We'll start off with an overview. So since this horizontal trend line right here, that's attached to this pivot right here, just became legitimate with its 3 touches at this point, and at this point right here. And since price has the tendency to want to test strong levels, in the long term I am long bias right back up to this horizontal trend line right here. And moreover, on the weekly chart, since there was more short strength than long strength, the weekly bias was short for the past couple of months. However, this week that main target was hit at this level right here. So in the short term, I am neutral bias. Okay, let's talk entries. Okay, this is a weekly chart. Let me run you by the setup I've been looking at for the past couple of months. So there was a strong short trade that formed right here, then a week long trade formed. So as price pulled back, I was looking for short entries right back down to this pivot low right here, and that target was hit right here. And moreover, as price came up in these areas, I was still looking for short entries. However, at this point right here, there was compact long price action that formed, which shows strong long strength. So at this point, the bias changed from short into long, or in other words, price was now likely to reach this pivot high right here before reaching this pivot low. So in the following weeks, price came up to hit that target right at this pivot high right here. And then simultaneously, there was another strong short trade that formed here. Then a week long trade formed here. So again, as price pulled back, I was looking for short entries right back down to this pivot low as a target. And that target was hit right here. And the same thing happened again. There was another week long trade that formed. So at this point again, the bias was short, or in other words, price was likely to reach this pivot low right here before reaching this pivot high. And so as price pulled back, I was again looking for short entries. And moreover, last week, there was another strong short trade that formed right here. That was stronger than the last weekly long trade. So at this point, although the bias was still short, price was now stating that price is likely to reach this pivot low right here before reaching this pivot high now. And that main target was hit this week. And so at this point, the weekly bias is neutral. And now I'll be waiting for another weekly long trade to form so I could gauge the strength of this long trade against that previous short trade right here. And if there's more long strength than short strength, then the weekly bias will be long, or in other words, price is likely to reach this pivot high up here before reaching this hypothetical long trade's pivot low. However, on the other hand, if there's more short strength than long strength, well then again the bias will be short, or in other words, price is likely to reach this hypothetical long trade's pivot low before reaching this pivot high. Okay, and moreover, there was an entry setup that formed at this level right here this week that if I was trading aggressively, I would have taken. Now, although I did not take this short entry, let me go ahead and show you what these aggressive entry setups are all about. So let's go over to the 1 minute chart. Okay, so on this 1 minute chart, again, the weekly bias was short and its main target was at the 1.3550 levels, way below. Now, an aggressive entry setup along with the higher time frames bias can be done through price patterns. So on this 1 minute chart, there was a fake double top that formed right here. Now, if you don't understand what fake and legitimate price patterns are, please watch my price action trading course and that should clear it up for you. So again, there was a fake double top on this 1 minute chart that formed right here, which shows short-term long strength. And the reason why this double top was a fake to begin with is because the prior trend was not in the correct direction. And so in order to have a legitimate double top, we want the prior trend to be long. However, in this case, the prior trend was short. So a fake double top shows short-term long strength. However, as you can see, price still went its target height level roughly in these areas right here. before reaching the second peak stop loss level right here. So this tells me that although there was short-term long strength, price was still able to push price right back down to its target height level. So in other words, there was strong short-term short strength, and that's along with a higher time frame short bias. So how I would enter this setup along with the higher time frame short bias is that when this target height level is touched right here, I will take the short entry with a stop loss at the second peak's pivot high stop loss level right here. And in this case, since this is an aggressive entry setup, I'll be targeting that weekly bias's main target that's roughly at the 1.3550 levels way below. Now, one thing to keep in mind is that these aggressive entry setups do have a high probability of failures. So in other words, what could commonly happen is that although the fake double tops failure is confirmed at this level right here, there are times when price pulls right back to stop out the stop loss level and then goes down. However, although the trade's risk increases on these aggressive entries, at the same time, the risk to reward increases also in terms of quality. So in other words, the risk in this case will be roughly 18 pips, while the reward is roughly 150 pips. Okay, so one thing to keep in mind is, again, if a trade's risk increases in terms of success and failure, oftentimes the risk reward also increases in terms of quality. Okay, so let me just show you what the environment is for this pair at the current moment. So let's go back to the weekly chart. Okay, so on this weekly chart, as you can see, price is stuck between two major gaps. Now the upper gap is slightly smaller than this lower gap. So in other words, this bigger lower gap provides more long strength than what this upper gap provides as short strength. Alright, so let me just show you the levels for these. So the upper gap's higher level is at 1.4953, and the lower end is at 1.4185, and the lower gap's upper end is at 1.3644, and the lower end will be at 1.2671. Alright, so at this point, like I mentioned earlier, I'm waiting for another weekly long trade to form so I can measure its long strength against the price short trade's short strength, and then decide my weekly bias. Now, if you just look at this weekly chart, it seems obvious that there's more long strength than short strength. However, on the monthly chart, there's also a couple gaps that we have to keep in mind in regards to measuring the bias between this hypothetical long trade and this previous short trade. So let's go over to the monthly chart. Alright, so on this monthly chart, that short trade actually had a small gap on this monthly chart that provided short strength. And on this lower end, there's a slightly larger gap right here. Okay, so since that last weekly short trade formed right here, you have to take into consideration this monthly small gap's short strength also. Now, taking into consideration the short strength of this monthly gap, although on the weekly chart there seems to be much more long strength, I'll be much more comfortable in having a weekly long bias if weekly price could fall down to this monthly gap level and then make a weekly long trade. So I could use the strength of this monthly gap to further propel the weekly long trade strength long. Okay, so at this point, although a weekly long trade can form even before this lower gap is touched right here, there is a chance that the weekly short trade's short strength is slightly stronger. And so ideally, I'd much rather have price fall right back down to this monthly lower gap level and then make a long trade, because that would make the strength of the long trades obviously stronger than the weekly short trade. And so if that pulls through, in the short term I'll be long biased with a stop loss at the hypothetical long trade's pivot low and its main target at the last weekly short trade's pivot high. Alright, however, keep in mind that the weekly bias is still neutral at this point, and that situation I explained earlier is hypothetical at best. Alright, so let me just sum this up on the weekly chart. Okay, so on this weekly chart, the last short trade that formed was right here, and it was slightly stronger than the last weekly long trade right here. So at that point, the bias was short, so price was likely to reach this pivot low right here before reaching this pivot high, and that target was hit this week. And so at this point, I'm waiting for a long trade to form so I could again measure the long strength against the short strength so I could derive a weekly bias. However, since the last weekly short trade was relatively strong, it will be much easier to analyze if price falls down to that monthly gap level and then forms that weekly long trade, For at that point, that weekly long trade will obviously be stronger than the last weekly short trade, and thus making the bias long, or in other words, price will be likely to reach this pivot high before reaching the hypothetical long trade's pivot low. Okay. Alright, so that's it for the weekly forecast. I hope you guys have a great week. And thanks for watching. Okay, bye.